Warren Buffett is unarguably one of the best investors of all time, and very recently we got to see the changes he made to his portfolio in Q4 of 2024. One of the biggest changes he made is to Domino's Pizza, where he added 1.1 million shares, which accounts for about 0.17% of his overall portfolio, so not that much. But let's figure out if this company is one you might want to add to your portfolio. Over the past year, they are up by 8%. And if we jump to my stock valuation spreadsheets and look to the 9 pillars, they get a rating of 6 out of 9. Now, their 5-year PE ratio is sitting at 30.87, so quite high, as well as their price to free cash flow. This indicates slight overvaluation. Now, their revenue has been growing very steadily over the past 5 years, as well as their free cash flow and their net income, though they have been growing at quite low rates. Now, if we have a look at the net income, it has been growing at a CAGR of 4%. So if we jump to the Grams formula, when I predict the high EPS growth at 6%, medium at 5%, and low at 4%, we will get an average of 5% every single year into the future, and that will give us an intrinsic value of about $200, which is 58% lower than the current trading price. Now, for the discounted cash flow model, when I predict the free cash flow growth into the next 10 years plus of 4%, which is quite higher than the historical free cash flow growth, we will get an intrinsic value of only $189.39, which again is a lot lower than the current trading price. Now, this all changes when I compare the company to its competitors, because when I compare Domino's Pizza to Starbucks, QSR and Chipotle, average out the P ratios of these companies and multiply by the EPS of Domino's Pizza, we will get an intrinsic value of $584.51, which is about 25% higher than the current trading price. Now, for the dividend discount model, we will take the average dividend growth sitting at 18.08% over the past 5 years year over year. I will then project the growth into the future of almost 15%, and that will give us an intrinsic value of $552.93. Again, quite higher than the current trading price. So finally, when we move to the ultimate valuation and average out the 4 valuation models, we will get an intrinsic value of $381.62, which is actually 20% lower than the current trading price. It's true that the company's dividends are growing extremely fast and their financials are increasing very steadily, but to me, they are just too overpriced. The second company I want to have a look at is one Warren Buffett actually sold out of completely, and that is ULTA Beauty. When I jump to Seeking Alpha, this company over the past year is down by 35%. So jumping to the stock screener, we will plug in its ticker symbol, and all the metrics, as always, will show up automatically. And if you want to download these sheets for your own personal use, you can always do so at the link in the description. Now, moving straight to the 9 pillars, the rating is sitting at 6 out of 8 for ULTA Beauty. Their 5-year PE ratio is sitting quite high at 46.63, but when I zoom into pillar 1, you can see that currently it is actually sitting at only 14.64, and the average has been pushed up by the PE in 2020 and 2021. Their price to free cash flow is also sitting nice and low at only 19.37, and their financials have been increasing very nicely over the past 5 years. Revenue at 13.95%, free cash flow at 12.80%, and net income seems to be increasing at 100% year over year. So zooming into pillar 4, you can see that the main increase actually happened from 2020 to 2021, and that is where most of the average percentage comes from. Something I also love about the company is the fact that they have been buying back shares very aggressively at a year-over-year rate of 3.36%. When I zoom into pillar 7, you can see that in 2020, they have been sitting at 57 million shares outstanding, and currently they are sitting at only 48 million shares outstanding. And of course, when a company buys back shares, it increases their value, it increases their earnings per share. So jumping back to pillar 1, you can see that their EPS increased from 12.15 in 2020 to 26.03 in 2024. Now, to get to calculating the intrinsic value of ULTA, we'll jump to the Grams formula where we'll get an intrinsic value of $382. For the discounted cash flow model, we will get an intrinsic value of $454, multiples valuation $505, and we will skip the dividend discount model as ULTA doesn't pay out any dividends. So after moving to the ultimate valuation and averaging out the 3 valuation models, we will get an ultimate intrinsic value of $447.48, which is 22.34% higher than the current trading price. And so with a margin of safety of 15%, we would get an acceptable buy price at $380.36. So this company does seem quite undervalued, and I really don't understand why Warren Buffett sold out of his position. Now, the third company I want to have a look at is one that Warren Buffett actually didn't make any changes to in Q4 of 2024, and that company is Apple. In Q1 of 2024, he reduced his position by 12.83%. In the second quarter, he reduced the position by another 50%, and in the third quarter, he reduced the position by another 25%, and Q4 of 2024 was the only quarter in that year where he didn't reduce a position in Apple. So let's have a look at this company. Over the past 5 years, they are up by 250%. But when I zoom into the 9-pillar analysis, you can see that their 5-year revenue CAGR is sitting at only 1.64%, free cash flow at 2.21%, and net income at only 0.36%. In fact, when I zoom into pillar 3, you can see that the revenue indeed hasn't been growing at all. That is the same case with the net income and the same case with the free cash flow. So the company has increased by 250%, but their free cash flow, net income, and revenue haven't grown at all. So that is one of the reasons why I believe Warren Buffett sold out. Now, when I zoom into the Grams formula, we will get an intrinsic value of about $70 a share, which is 70% lower than the current trading price. For the discounted cash flow model, we will get an intrinsic value of $112. For the multiples valuation, we will get an intrinsic value of $182. And finally, I will actually skip the dividend discount model and arrive straight to the ultimate valuation, where when we average out the 3 valuation models, we will get an ultimate intrinsic value of $121.41, which is about 50% lower than the current trading price. So there is no question why Warren Buffett sold out of this position. From the time he invested, he saw great gains, and now he is ready to push the money elsewhere. And with that, I hope that you enjoyed the video. Remember that if you'd like to download these spreadsheets, you can always do so at the link in the description, and make sure to leave a like and subscribe as it really helps me out.